Okay, so an entire country's stock market just fell into a bear market this week, and the reason everyone is giving is two words: artificial intelligence. South Korea, home of the biggest memory chip makers on Earth, down more than 20% from its high because traders suddenly decided the artificial intelligence trade is a bubble about to pop. And look, maybe it is. But here's the thing nobody's screaming bubble actually checked. The one stock everybody points at as the bubble. The poster child, Nvidia, it is quietly the cheapest it has been compared to itself in 6 years. The AI bubble, says who? Because the number that is supposed to prove the bubble is doing the exact opposite. Let me show you. First, the panic is real. I'm not dismissing it. Korea's market plunged more than 20% from its peak in a matter of weeks. Samsung and SK Hynix, the two memory giants that basically are that market, got hammered, down 4, 5, almost 15% on the worst days. Investors are genuinely scared that all the money pouring into artificial intelligence is building toward a crash. That fear is everywhere right now. So you would expect the leader of the whole trade, Nvidia, to be priced like a mania, wildly expensive, priced for perfection, right? Except, and this is the whole video. Bloomberg's Joe Weisenthal pointed out this week that Nvidia's forward price-to-earnings ratio, which is just its price divided by next year's expected profit, is now back to the exact same level it was in 2019. 2019, before the artificial intelligence boom even started. The single most hated bubble stock on the planet is being valued like it's a normal company in a normal year. Here are the actual numbers. Nvidia trades at about 22 times forward earnings today. Its average over the last 5 years is 72. So the stock everyone calls the bubble is trading at less than a third of its own normal price tag. Goldman Sachs looked at that and used one word: compelling. 22 times when the market average itself is around 20. This is not what a bubble looks like. A bubble is expensive. This is cheap. So what on earth is going on? Here's the mechanism, and once you see it, you can't unsee it. A bubble is when the price races way ahead of the actual earnings. The stock goes up and up while the profits don't keep up, so it gets more and more expensive. That is a bubble. But with Nvidia, the opposite happened. Yes, the stock went up a lot, but the earnings went up even more. The company's profits grew faster than its share price. And when earnings grow faster than price, the valuation actually goes down. The multiple compresses. That is the literal opposite of a bubble. Price up, earnings up more. Multiple down, that is not a bubble. That is a company that got more expensive to buy and cheaper to own at the same time because the business grew into the hype and then some. If it's not in the leader, where is the bubble? Two places. First, in the narrative, in the vibes. The word bubble is being thrown around way faster than any actual valuation supports it, and that fear is what dragged Korea down. Second, if there's real excess anywhere, it's in the second string. The commodity memory chips, the smaller names riding the wave, the ones whose prices ran up on pure momentum without the earnings to back it. When the fear hit, the market sold those first and then sold the leader by association. That's the mistake. The panic is real, but it got pinned onto the wrong name. Now the honest part, because I'm not here to sell you a stock. 22 times is only cheap if the earnings are real. If the whole artificial intelligence build-out actually rolls over, if all that spending dries up, then next year's profits don't show up, and suddenly 22 times isn't cheap at all because the E in that ratio was a fantasy. That is the real risk, and it's exactly what Korea is scared of. The bears aren't idiots. Cheap can always get cheaper. This is a genuine question, not a victory lap. Here's the read I'd leave you with. When a whole market panics about a bubble, check whether the thing they're calling the bubble is actually priced like one. This time, it isn't. The fear is real, but it's mispriced, dumped onto the one name whose valuation already came back to earth. So don't watch the narrative. Watch the leader's earnings. If those keep growing, the crowd sold the cheapest it's been in 6 years because a different market in a different country got scared. That's the asymmetry. I'm Frankie. One Contra Ryan, read a day. Subscribe.